maybe going back to 2007, we had a discussion on the phone. There were a lot of investors that were not considering really asset management as a capital thing to do after buying it. So you had a lot of people back in those days that were just buying real estate and getting a heavy finance on that. As of today, I think that now everyone has really integrated that they need strong asset management capabilities to basically realize the business plan, to hold the values, and this is the real difference because I'm not so old, but when I began in the business, like in 2005, basically from 2005 to 2007, I was just doing acquisition, and we had no time to do asset management. And obviously, after Lehman collapsed, basically we did only asset management for like 2.5 years, maybe a little bit more, to wait for the market to rebound. But I think, even if there's pressure as of now on yields, and there's a lot of pressure in real estate, that there's a lot of capital flowing in, everyone is really assessing, very importantly, all the asset management capabilities before the acquisition.
Okay, good. Michael, did you want to pick that up?
Yeah, I'll just pick up a couple of those themes. Certainly, we've been involved in a lot of bank workout situations, and the biggest problems seem to come where, dare I say, often many of them were type of UK investors who went into the German market at the wrong time. And I think that what we've seen over the last few years is actually a very similar trend that's happened to the banks. There's been like a deglobalization of asset management where everyone felt they could supply it very remotely. And banking has realized if you're going to lend properly, you've got to do it at a local level, otherwise you'll end up getting caught out. And I think certainly, that I'm fearing that some of that may be being forgotten, that lesson, but it certainly was an important lesson, I think, from the global financial crisis.